Hi guys, this is Damien from OrderFlow chart. In this video I would like to introduce the trading strategy based on order flow patterns that I use every day. So first of all, I usually trade on 10 minutes or even 5 minutes. In this case we have the Euro future 10 minutes, and this is this is a candlestick chart, and I'm going to use the order flow chart software. Okay, so it will start to load the data feed. I will take it 60,000 ticks, and parameters, bit radio, aspect radio, and difference, it will be the same, just as a default settings, and we will press OK, and it will start loading. Now we can go to our trading strategy. Okay, so I have this one. So 3 different steps. Okay, 3 different steps. That's all. That is the OVC trading strategy. That is the order flow chart trading strategy, which I use every day. So the first step, the very first step that you have to do before start trading is to find location. Okay, so let's go to the chart to find locations where we are willing to do our trades. Okay, so for that it is already opened. Euro USD Euro futures, 1 hour chart. Here it is, and we take the volume profile, okay, from the previous day all the way history, and around you can take 2 months or 3 months. So we have enough data on the chart. The indicator is pointing these violet dotted lines, and those points, those price levels, are high notes levels where the professionals, where the high activity happened in the past. Okay, so what we are looking for is for those areas of acceptance, okay, which are already indicated by this indicator. So we have, for example, this one. Okay, these are all high volume nodes. Okay, this one, for example, today, and the point is one point, the price level is 1.1960. So I'm going to mark that, okay, because on 10-minute chart, because there is very important point that eventually it will be trading. I would like to trade if the price comes from down, from lower prices, I would like to trade against it, or I will wait to break it up and then comes again to test as a support, and we can take long. But we don't know. We have to wait. We have to follow the order flow to see what's going on. So we are going to draw that line on Euro future 10 minutes, 1960. So we did the chart 1960. Okay, so place 1960. 1960. There it is. Okay, and it's still loading. Okay, all the data that we need. All these data represent buyers and sellers. Okay, but what is important are those in color. In this case, red means aggressive selling, and blue represents aggressive buyers. So we are constantly looking for those aggressive participants in any financial market. Those are the players which will drive the price up or down. Okay, those are the players which will create the imbalance at any financial market. So we have to locate them, okay, and especially we have to pay attention to different patterns, unique patterns, which we can take a look at just using order flow chart. And for example here, you can see at some point some bars we have different numbers, like this one 150 and 143. Okay, but they are wide separated. Okay, what we are looking for are cluster of buyers or cluster of sellers, which will represent eventually a strong support and resistance generated by volume, generated by those aggressive participants in the market. So, for example, just to look at this graph and all the numbers displayed here, just pay attention to those in color, okay? But especially those in colors which are stacked or clustered, okay, in different price levels. For example, we can see here, okay, we can see here on this point, which will be a very, very important area eventually of support, because that was supported by buyers. We have 3 different price levels of aggressive buyers, and the price went up. Okay, it was marked up. So eventually, when the price comes down and tests the same exact price levels, I will expect that those buyers, okay, will start to buying again, and they will be a potential buy trade setup. Okay, it works in that way, and we have to look for real-time buyers and sellers, and especially those clusters. Okay, so I will let it just to load all the data, okay, till the last bar, and we're going to switch to the location. Okay, the location, you can, the indicator will tell you based on these lines, on these horizontal lines, that you have high volume nodes, and high volume nodes are for based on market auction theory are being considered to be acceptance areas. Okay, so we can mark, for example, that this area, okay, the professional institutions, banks, etc., the big player are willing to buy or to sell, okay, hiding its own volume, its own orders or contracts. And at some point when the market start to move sideways, okay, at some point that the balance will be broken, okay, but those who are willing to buy or willing to sell. And that is what generated in any financial market the next direction of the trend. Okay, it initiating a trend from that point. So these areas, these points are very, very important, and you have, for example, one here, even more important down here. Okay, when you have two consecutive pre-close each other like this one is important, but not so important than, for example, this one. This is very important, and this will be kind of rejection more, but we have another here. It's just at this top, so you can mark here at this top we have another one. Okay, so this is location. We're looking for the price that comes to those price locations. Okay, in this case high volume node. Also you can mark the values. Okay, for example, this one is considered to be a low volume node. Okay, and for example, we can take this one as well as low volume node, and eventually this area as low volume nodes. Okay, so those are the location, those are the levels that we are willing to take a trade. Okay, we are willing to take a trade. Always following the second step. Okay, and the second step is confirm your trade setup using order flow chart. Okay, using order flow chart. What does it mean? It means that if the price comes to a potential resistance, okay, using this location chart, you are going to look for eventually cluster or some kind of order flow chart pattern, okay, showing in the order flow chart or order flow software. In this case, we already marked this potential level. Okay, 1960. Okay, it is there, and you are going to see a bunch of numbers. Okay, but those important are those which are in cluster, like this one here or this one here. Okay, and for that, okay, I'm developing another. It will be released very soon for all subscribers. I'm developing this ghost institutional block indicator, okay, which will display for you. Okay, I'm looking for you those potential areas where the resistance or support generated by the cluster of buyers or sellers, okay, are located. So we place OK, and eventually it will be display. Okay, you see those little rectangles. Okay, they were used for support and resistance. You know, for example, here at this point, okay, we have a trade setup. Why? Because in the cluster here, because indicated here by 1, 2, 3 different levels of bias on this bar. So for example, if you take a look at this one, okay, I will change the color so you will be not confused with this one. Okay, bias blue, and the other one will be here. That's the area. Okay, once this bar, okay, generated this cluster of bias here, okay, any attempt to test it, and eventually we are starting to see those aggressive bias here. Okay, that would be a trade setup. That would be a trade setup to enter. Okay, we have the trend, the markup already started. Okay, it make a pause. Okay, more buyers stepped in that pause. Okay, it was tested. Okay, there are sellers as well, but we are in uptrend and we have a cluster of buyers. We are not going to sell. So on this bar we can buy. On this bar we can buy. Okay, and the price reacts to that. Okay, it was markup till where? Well, this point was 1960. So it goes all the way up 1960. So that would be a TP, a take profit. Okay, well at that point the sellers started to appear. Look at this bar. Okay, look at this bar, and also generated cluster of sellers at the right point. But it's still, okay, it was tested on this bar, but there are no sellers here. There are no aggressive sellers. There are buyers. Okay, it's still the buying power at this point. Okay, so when it was tested again here, we have these yellow brackets which represent the POC of each individual bar, of each individual 10-minute period, and this 247, okay, on our bar, and these 4 here, it represents sequential decline of buyers, and at the same time, at the point of control, aggressive sellers stepped in at the right place, because it is at the right place. It is our location first step. Okay, so from that point, okay, this bar and this bar, okay, you have a bearish pattern here with confirmation of aggressive sellers at the right place, at the right location. So we can sell right there, or we can wait. Okay, we can wait for that area, which eventually will be a cluster. Okay, this one, it will be a selling cluster, and to sell here. Okay, this is a down bar with sequential decline of buyers and aggressive selling. This is an up bar with sequential decline of buyers and aggressive sellers as well at the POC, at the point in control. So you can sell here and you can sell here as well. Okay, and where will be a stop loss? A stop loss will be just a few points above this level, which generated all this down movement, this retracement. Okay, will it be the target? Well, the target will be just right there, where the buyers are waiting for the price action to come. Okay, so eventually when this price action comes here, we can start seeing buyers again. Okay, if that's so, that will be a trade setup. If we're looking for a down bar with a cluster of buyers, or a down bar with aggressive buying at the point of control, and there will be a long trade setup. Okay, good trading to all. Thanks for listening.